This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Raise the roof. Americans are buying new homes at the fastest pace in 8 years as the spring selling season picks up momentum.
Drowning in debt? Borrowing is up for the things we need, such as houses and cars and educations. But are consumers taking on too much debt?
Power and speed. They're iconic, they're fast, but are muscle cars strong enough to protect you during common collisions? Those stories and more tonight on Nightly Business Report for Tuesday, May 24th. Good evening, everyone. I'm Sharon Epperson, in tonight for Sue Herrera.
And welcome, I'm Tyler Matheson. A powerful rally on the street, and it wasn't just one thing that pushed stocks higher today, but rather a combination of factors. Housing data was strong. Oil prices went up, new highs for the year. And there seems to be an increase in confidence that higher interest rates likely won't hurt stock prices very much, if at all. The Dow Jones Industrial Average climbed 213 points to close at 17,706. NASDAQ added 95, and the S&P 500 rose 28. Mary Thompson has more on today's big gains.
Stocks finished strong on the back of a big gain in April's new home sales and on the back of strength in the European markets. The U.S. markets rallying from the opening bell. This after a new poll showed that Britons are less likely to vote to leave the EU in what is known as a Brexit. Add to that, the government reported that new home sales for the month of April rose to their highest levels in 8 years. That data, along with the news that prices for those new homes were at very high levels, and the news that the luxury home builder Toll Brothers came in with stronger than expected earnings, all adding fuel to the market's rally. Pacing the gains today, strength in healthcare, in finance and tech stocks, especially semiconductors. These sectors, though, among the poorest performing sectors of the year. And this led sub-traders to point out this could be a short covering rally, or when investors who bet these stocks would fall, reverse their wages. While impressive in its all-day staying power, traders still remain cautious about today's rally, in large part because they say the markets continue to face a number of headwinds, including the potential for higher interest rates and price evaluations. At the New York Stock Exchange, I'm Mary Thompson for Nightly Business Report.
As Mary just mentioned, those strong new home sales put investors in a buying mood. The Commerce Department said new home sales climbed more than 16.5% in April to a seasonally adjusted annual rate of 619,000 units. That's an 8-year high. Prices also hit a record. Diana Olick has more on what's shaping up to be a very strong spring market.
There just aren't enough homes for sale. That's one reason builders are seeing big demand. Supplies of existing homes are falling nationwide and especially in major cities. Inventories down double digits in Seattle, Atlanta, Portland, Charlotte, Dallas, and Kansas City, just to name a few. New listings are down as well, as potential sellers are afraid they won't be able to find anything to buy.
We got helium in the housing market because of the Fed, super tight inventories creating demand, and massive job growth. This is a great setup for a slow and steady recovery.
Slow, yes, but not so steady. Sales of newly built homes jumped nearly 17% in April after falling in the months before. But it's not just that headline turning heads, it's the price. The median price of a newly built home soared nearly 10% to $321,100, the highest reading on record. The last peak was in 2006. Not only is demand pushing home prices higher, builders are basically absent from the starter home market because most of the action is on the pricier end, which in turn skews that median number higher. That was clear in a big quarterly earnings beat by luxury builder Toll Brothers, raising expectations for 2016 sales and seeing its already pricey price head even higher to well over $800,000.
The issue of the millennials or people of that age and deferral of marriage and waiting to buy and then when they buy, they're much older and therefore are not a starter home buyer anymore.
It all bodes well for builders, but not so much for buyers, as prices will likely continue to heat up right along with the mercury this summer. For Nightly Business Report, I'm Diana Olick in Washington.
To read more about supply and demand in housing, head to our website, nbr.com.
Of course, most of those people who bought new homes had to take out mortgages to get them. And that was one of the reasons why household debt, which also includes auto and student loans, rose in the first quarter of the year. But unlike the period of time leading up to the financial crisis, increased borrowing may not be such a bad thing this time around. Steve Leisman explains.
Total household debt climbing a slim 1.1% in the first quarter to $12.25 trillion. It's the seventh straight quarterly rise and the biggest increase in mortgage debt since the Great Recession. That's according to the report from the New York Federal Reserve Bank. There were also increases in auto and student loans, but declines in credit card and home equity debts. So is consumer debt a problem? Are we in the middle of a consumer debt bubble? Hardly. Total debt remains more than $400 billion below the peak of 2008. That means per capita debt continues to decline since the population is bigger now, and credit quality continues to improve. New foreclosures and bankruptcies both fell. Newly delinquent loans rose by the least since 2005, up just $138 billion. In the teeth of the recession, delinquent debt surged by more than $400 billion a quarter. Delinquencies are down because banks continue to lend to those Americans with just the best credit. Before the recession, people with the best credit scores got 24% of all mortgages and the worst got 13%, in part because of subprime lending. Now, the best credits get nearly 60% of all new mortgages. The second tier has fallen in half, and there's virtually no mortgage money for Americans with the lowest credit scores. It raises questions about whether banks are too sheepish in their lending or regulations are too tough. Some problem areas remain in consumer debt. Total auto and student loan debts remain above $1 trillion. The percent of loans that are 90 days plus delinquent rose slightly for autos, but fell for mortgages, credit cards, and even for student loans. Overall, it's not a very worrisome picture of consumer and debt. Certainly not one that suggests we're in the later innings of a credit or economic cycle. For Nightly Business Report, I'm Steve Leisman.
Jack McIntyre joins us now to talk more about household debt, the consumer, and the economy. He's the fixed income portfolio manager at Brandywine Global. And Jack, listening to Steve Leisman's report there, it appears that we're doing better here in managing our debt as consumers. Why is that, and why are consumers doing a better job perhaps than before the financial crisis?
Well, I think there's a couple of things. And Steve pointed it out. I think, first of all, I think lending standards have been ratcheted up since the global financial crisis. So, it's a little more difficult to take on debt. But I think more importantly, it's the debt is in the hands of the consumer that is in a better position to be able to service and pay back that debt. And the other part, which I think is certainly as important, that debt, it's mortgage debt. It's going into housing. Housing it's an asset that should appreciate over time. So there'll be some wealth created along with that. So I think the takeaway, it's gradual increase in debt, and that it's not borrowing people that are just overextended, the people that already have pretty good balance sheets.
So loans being made to better borrowers. Let's talk a little bit about what effect rising interest rates might have on those borrowers. Is it going to pinch them in any sort of meaningful way?
I don't think in the initial phase, because I'm in the camp. I think actually if the Fed is in a position to slowly, and I think it's important to go slowly in terms of tightening policy, that's associated with a U.S. economy that's doing better. And as part of that economy doing better, it should mean wages should start to move higher. So it's a little bit of a battle between a consumer that has better income versus, okay, hey, maybe I have to pay a little bit more, for that mortgage or credit card or whatever type of debt it might be.
So at what point, Jack, should we be concerned about the level of household debt? When does debt become bad?
Yeah, so debt becomes bad when the U.S. economy kind of teeters on a recession. We're not there yet. And again, I think we have had a kind of cultural shift in terms of how consumers think about debt. I think, I just don't see the days that we are borrowing to consume anywhere like we were, 10 years ago. I think consumption is going to be more a function of income, of wages, which means that we should have a little bit less economic volatility. But no, if the Fed makes a policy mistake, U.S. dollar rallies sharply, the U.S. economy slows down into a recession, then obviously debt, it's not going to be your friend in that kind of environment.
Yeah, but right now it seems like we're on a good track. So hope that continues. Jack McIntyre with Brandywine Global Investments. Thank you.
Well, the president of the Philadelphia Federal Reserve is echoing recent comments of other Fed officials. Patrick Harker said the central bank should raise interest rates at the next policy meeting in June. That is, unless there's a shift in the economic data between now and then. He added that he can easily see 2 to 3 more interest rate hikes this year.
And an update to a potential merger that we've been reporting on. Monsanto has rejected Bayer's $62 billion offer, calling it, quote, financially inadequate. Monsanto's CEO also said the initial offer failed to address financing and regulatory risks. However, the world's largest seed company is open to continuing talks with Bayer. And Bayer says it's looking forward to engaging in constructive discussions. Shares of Monsanto climbed more than 3%.
In other deal news, Hewlett-Packard Enterprises will spin off its enterprise services business and merge it with Computer Sciences Corporation. The combination creates a company with $26 billion in annual revenue. It's expected to deliver $8.5 billion to HP Enterprise shareholders. Separately, Hewlett-Packard Enterprises, which is itself a spinoff of Hewlett-Packard, reported earnings in line with Wall Street estimates. Shares of HPE rose sharply in after-hour trading on news of the deal. Shares of Computer Sciences also spiked, as you see there.
Still ahead, a high-stakes trial in Silicon Valley that has the entire tech industry on edge.
Oracle and Google, two of the world's biggest tech companies, are battling it out in court, and the outcome could extend far beyond these two companies. Deirdre Bosa at the courthouse in San Francisco tells us what's at stake.
Two tech titans, $9 billion, and a decision that could send shockwaves across the industry. The stakes are high in the Oracle versus Google lawsuit that now rests with a jury. Oracle claims that Google violated its copyright when it used Java programming to create Android, now the most popular operating system in the world. Google contends that it was fair use of that code. But the case goes beyond the two companies. At its heart is open source, a pillar of the software industry that a huge community of developers and startups rely on. And they may not be able to defend themselves as Google can if Oracle wins.
If indeed the fair use defense is not said to hold here, and the jury does find that Google's liable, companies and software programmers are going to have to make sure that they secure the rights and not just go along assuming that no one's going to call them to the carpet and when there's time for infringement.
This trial has been dragging on for nearly 6 years, and as lawyers made their closing statements, the rhetoric became increasingly heated. Oracle's lawyer told the jury, you don't take people's property without permission and use it for your own benefit. Google took a shortcut, and they took a shortcut at Oracle's expense. Meanwhile, Google's attorney told jurors that Oracle is accusing Google of unfair copying because it failed in its own attempts to enter the smartphone market. He said they now want all the credit and a whole lot of money. That is not fair. Now that is up for the 10 jurors to decide, and it needs to be unanimous. Until then, the tech industry remains on edge. Deirdre Bosa for Nightly Business Report in San Francisco.
Meanwhile, Google's former CEO Eric Schmidt spoke about Google's legal fight with Oracle at a major conference in Europe designed to help startups grow faster. He made the comments to our Julia Chatterley, who also interviewed a number of other well-known business leaders. She has more now from Amsterdam.
I'm in Amsterdam, the Netherlands, for the 2016 Startup Fest Europe. This is effectively speed dating between European startups in the tech sector and potential investors. There are a whole host of speakers today. Tim Cook of Apple actually kicked off the proceedings, and he spent a great deal of time talking about recent privacy issues.
We think if you send a message, we're more like the FedEx carrier. Right? We take the message sealed and bring it over. And And so that's our point of view, and it's not a new point of view. It's a point of view that we've had, and we've constantly added more and more security. And I realize that some people have a different view, but I hope the people that do at least understand where we're coming from.
I also got the chance to speak to the Alphabet chairman, Eric Schmidt. We talked about today's court case between Oracle and the company, and he said if the ruling goes in Oracle's favor, there's only one loser.
We're part of the open source movement, so I think it really hurts Oracle because they own Java and they need to promote it into this new world. And it just doesn't make sense to me that they're in that path.
I couldn't let Eric leave without talking about US politics. Now, it's pretty common knowledge that he's backing a startup that's looking at data analytics for Hillary. It was the same for President Obama. And I picked up on Donald Trump's recent comments that data is overrated. I asked Eric for his views.
Let us start by saying with Donald Trump that his candidacy has largely been fueled by Twitter, last time of which I checked was a tech company that used a lot of data.
So the speed dating here in Amsterdam is going to continue for the week throughout the country. It may be the first event of its kind, but the hope here is if you can attract talent like Tim Cook and Eric Schmidt, it certainly won't be the last. For Nightly Business Report, I'm Julia Chesley.
A fast-growing Silicon Valley startup could soon be valued at more than $20 billion. Snapchat, the popular messaging app, is seeking at least $200 million in investment capital, and that's according to TechCrunch. That number implies that whopper of a valuation. Just 3 years ago, Facebook offered to buy Snapchat for $4 billion. The company has about 100 million daily users.
Best Buy warns of a profit slowdown, and that's where we begin tonight's Market Focus. The electronics retailer posted better than expected quarterly results, but sees profit in its current quarter falling below expectations after an earthquake in Japan impacted the supply of its high-margin products. Best Buy also said its chief financial officer is stepping down. Shares fell more than 7% to $30.55. Verizon is warning an ongoing labor strike may negatively impact its second quarter results. The telecom giant said while it has been able to manage maintenance requests, it has not been able to meet new customer demand. Nearly 40,000 employees have been striking since April 13th. Shares finished the day up almost 1% to $49.58. Pharmaceutical company Eli Lilly says it has the potential to launch 14 new drugs by 2023 in areas like diabetes and oncology. The company's CEO thinks Lilly is well positioned over the next decade.
We're finally able to take this science and turn it into products. Right. And demographics are in our favor. I mean, 2/3 of the medicine that you take in your lifetime, you're going to take after the age of 65. So people are going to need the products that come out of our labs. And I think that's a great sort of lineup to have as we look 10 or 20 years into the future.
Shares rose a little over 1% today to $74.99.
Under Armour is upping its game, signing what's believed to be the largest apparel deal in NCAA history. It is a 15-year arrangement with UCLA, and it's worth $280 million. The new partnership begins in July of 2017. Shares of Under Armour up more than 2% to $38.22. Domino's Pizza might owe some of its employees a lot of dough. That's because of the New York Attorney General, who is suing the nation's largest pizza delivery chain and 3 of its franchisees, alleging that employees at 10 New York locations were underpaid by more than $500,000. An investigation by the state found the company was knowingly using a computer system for years that inaccurately calculated workers' wages. Shares of Domino's up fractionally at $122.52. And AutoZone's latest results hit a speed bump. Profit rose nearly 6% at the automotive parts retailer AutoZone, but that wasn't good enough to beat estimates. Revenue also missed as the company cited a legal charge and bad weather in several of the regions of the country it serves. Nonetheless, shares of AutoZone up nearly 2.5% to $760.42.
The fast-growing industry of competitive video gaming just took a big step forward. This Friday, you'll be able to watch other people play games on your living room television. Before, it had just been available on your computer. But is esports popular enough to be the next big sports business? Julia Borston tells us whether it is ready for prime time.
There's a good team and a bad team.
Believe it or not, 220 million people love to watch other people play video games. And now they'll be able to watch these esports face-offs on television. Today kicks off the first tournament hosted by E-League, a partnership between Turner and agency WME. After 4 days of streaming competitions that will be played in front of live audiences in Atlanta, the finals will air Friday on TBS. The first of 20 esports events Turner plans to broadcast on television this year, chasing a younger demographic particularly desirable for advertisers.
They're going to see a very high-end product with a lot of engagement from the very sought-after millennial demo. And eventually we'll see a conversion of advertisers moving into this space.
The E-League sponsors include Arby's, Buffalo Wild Wings, and Credit Karma. And Coca-Cola is an ongoing partner of Riot Games' League of Legends competition. The CEO of the Immortals team says esports has a big advantage.
I think what a lot of brands are realizing is that if you're trying to reach an 18 to 34-year-old male demographic, it's this or Netflix, and Netflix doesn't sell advertising.
Former NBA player Rick Fox, who owns a team competing in today's E-League, says this TV tournament is a turning point for esports, another way that teams can cash in on their growing fan base.
There's traditional sports and a traditional sport attack to it, right, which is your ticket sales, your media rights, your sponsorship, and merchandising, all the ancillary and traditional ways you would see a professional sporting franchise capitalize on their investment.
And a range of media, game, and tech giants are betting on esports appeal. ESPN launching an online vertical dedicated to esports. Both Activision and Electronic Arts are investing in new esports divisions. Google's YouTube is building up its app for watching gameplay, and Amazon spent $1 billion nearly 2 years ago to buy Twitch, the leading destination for streaming video games.
On Twitch, you're averaging 80 to 90 minutes of engagement in the 18 to 35 demographic, which is what everyone wants to hit.
The esports industry is projected to grow to $1.9 billion in 2018, up from $750 million last year. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Coming up, do muscle cars live up to their names when put to the crash test? The head of security for the TSA is out. Kelly Hogan was removed from his post as frustration mounts over long security lines at airport checkpoints. Hogan also came under fire for bonus payments he received. During his tenure, a Homeland Security report found that the TSA failed to spot 95% of concealed weapons and explosives.
Toyota and Uber are teaming up. The world's largest car manufacturer is establishing a strategic partnership with the world's largest ride-sharing app. The collaboration includes an investment by the automaker in Uber. Under the agreement, Uber drivers will lease their vehicles from Toyota and cover their payments through earnings made while driving for Uber.
Volkswagen also getting into the ride-sharing market. The German automaker investing in an Israeli startup, Get, considered to be a rival to Uber. Separately, a federal judge said VW is making progress toward a final settlement in its diesel emissions scandal. It will include compensation for owners of more than 480,000 vehicles whose exhaust systems were rigged to foil emissions tests. The deal is expected before late June.
A new series of crash tests is raising questions about the safety of muscle cars. We're not talking about classic versions of the cars that first became popular in the late 60s. No, these tests focus on the newest muscle cars that are packed with more horsepower and more features to help protect you in a crash. Phil LeBeau has more.
Be honest, muscle cars like the Chevy Camaro, the latest version of Ford's Mustang, or the redesigned Dodge Challenger are primarily about power and speed. They all come with versions packing more than 500 horsepower. But how safe are they? The Insurance Institute for Highway Safety put these muscle cars through a series of crash tests, and the results were mixed.
people do drive muscle cars faster. The more horsepower we put in, the faster we see vehicles go. And that means they're going to crash at higher speeds, and they need state-of-the-art crash protection.
One particular test, which replicates a common and deadly collision with the front corner of the car, raised some concerns. The IIHS rated Chevy's Camaro as good and Ford's Mustang as acceptable. But the Dodge Challenger's performance was called marginal by the IIHS. A spokesperson for Dodge says no single test determines overall vehicle safety. FCA U.S. vehicles meet or exceed all applicable government safety requirements. None of the muscle cars tested did well enough to earn the Insurance Institute's best rating of top safety pick, but it's unlikely that will slow down their popularity. Since 2009, the Camaro, Mustang, and Challenger have all seen strong sales growth, and that's likely to continue with new models of these muscle cars on the way. The big three know speed and power still sell, which is why more than 250,000 muscle cars were sold in the U.S. last year. And this year, that number is expected to be even higher. Phil LeBeau, Nightly Business Report, Chicago.
To read more about the muscle car crash test, head to our website, NBR.com.
And before we go, here's another look at the big rally on Wall Street today, helped by a strong report on housing. Look at the Dow, up 213 points, more than 1.2%, 17,606. NASDAQ, 2% higher, up 95, and the S&P 500 up 28.
That's Nightly Business Report for tonight. I'm Sharon Epperson. Thanks so much for watching.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you right back here tomorrow night.